I mean, recordings on this one already. So for Fibonacci levels, if you're looking to look for a sell, you would click on the highest candle in that current area that you're looking for. Click on it and drag it down. If you're looking for um, a buy, you click on it at the lowest point and you put it where the current high is right now. Same thing for the low. You click on where it broke out for a buy, right? So the levels are as follows, right? It's 100 for the current high, 76 for area is like a retest of the low of the lowest. It's like a retest of the previous high, pretty much, is what I'm trying to say. 6180, also another retest of the high in that area because it's like doing the trend and shit. 50 would be like your first hit for either continue going down or start going down, like cross, retest down, or support, and then it's totally going the other way only to come back and retest that area. So 50 is like a 50-50 essentially. 38.20 has a 70% chance of continued push. So once it starts breaking below and actually coming into 38, it's like, yeah, that bitch is starting to come down. It's going to come down, right? And 23.60 area is retest of the previous high. So again, continuation. It's essentially they're just like levels where it continues. So if it doesn't retest, essentially, if it doesn't retest and continue dropping, then it's going to go the other way. Okay. And 0 could be it's just pretty much if bull, if bear, pretty much. So like 0 could be like where the candle stops and starts pushing the other way, for a pullback, or consolidate for a fucking swing back up, and all this was for nothing, and it just cancels out and shoots up like out of nowhere, right? So, but the negative 25 would be your first take profit, and the negative 6180 would be your second take profit. Does that make sense? I recorded this, so you'll be able to follow. But I want to take a picture of this, but it's too much information. It's all like scribble scrabble. Okay, so trading strategy. I'm just gonna read it real quick. Look for highs or low points to determine where the market is heading. To look for a proper entry, look for support resistance. More than one bullish candle for a buy, more than one bearish candle for a sell. So you see two bullish candles and they're respecting lows, take a buy. If you see two bearish candles, they're respecting the high, take a sell. Obviously, look for the retests as well because they are going to happen. You've seen them before. And just follow. If you already took a trade and it came back up, take it out, collect your profit, come back up, wait for that retest in the area. Because if it looks like it's building up to the area like it did right here, it's obviously going to come back and retest. If it doesn't break, it's going to be a sell. And vice versa. Look for a previous bullish candle or candles for a low. So look for a previous bullish candle in that area. So like right here, there's a bullish candle here, bullish candle here. This price came back down, created this bullish candle, and created a low. and then zoom in with the 4 hour, 1 hour, 30 minute, 15 minutes. So make sure whatever's happening here, Tyler, can you see the screen?
Yep.
Yeah. So whatever's happening here, go on the 15 minute, obviously 4 hour, 1 hour, 30 minute. Make sure they all make sense of what's about to happen. Make sure it's all looking like it's going up, pretty much. Last case scenario, use the 5 minute in case there's no proper confirmation. So in the 15 minute, you still don't see it, jump on the 5 minute and see what's forming. You get the 5 minute confirmation, you get a cleaner entry, take it. In the smaller time frames, it shows as low plus uptrend plus high being formed plus retest of previous high. That's how the smaller time frames are. So on the smaller time frames, so like right here, 15 minute, on the 5 minute, it'll show low. It'll show like an uptrend because this right here is like a little uptrend on the 5 minute. A high formed, and then a retest of the previous high, right? So right here at one point, it retested up here, closed. This right here probably was bearish right here, retested the high, and then that's probably what made it launch up. We can't see on the 5 minute because unfortunately, again, it's a pass. But that's probably what happened. If candles met are bullish, look for lows being respected, right? These lows right here being respected. Enter a hold position, set realistic targets and proper stop loss. Same goes for sells. So right here, we probably would have entered here, take profit around here, and that right there would have been like 12 pips. Again, you start looking at the ranges. If it's too fucking close to the high, and you measure out how far the distance is, only take trades that make fucking sense on ranges, on like right here. This is a high right here, and you look at price like right here. It looks like it's a lot of fucking pips, right? But like, it wasn't. That's another thing. Just look for ranges. Make sure they make sense. If it's a 30-minute fucking range, let it fucking go. Wait for the fucking proper fucking hook for the retest and fucking enter that motherfucker. Okay? Because as you saw here, 40 fucking pips, right? Give or take 30, 35 with fucking the spread, 35, whatever. 40 pips. Let's just say 40 pips. Sorry, 30 pips. What the fuck, I'm tripping. 30, so 25. Sorry, 25. Let's say 25 pips, right? Right here that we could have got. So just make sure they make sense when you're entering the trade. Use fib when all 4 time frames line up for buy or sell. Okay, so this is when you use Fibonacci. When all your time frames are lined up, pull out the Fibonacci and fucking take your entry. That's how earlier when we are like, oh, okay, let me just put it right here. I was just doing it because I know it's gonna go down, but I don't have that information at hand. I didn't have that information I had at the moment, right? And that's why it took me out right here, right? So only use fib when all your time frames line up and you're about pretty much ready for the fucking entry and the fucking take profit. Okay. Candles with a lower wick, candles with a weak body, a low wick for like a buy or low wick for a sell can be possible areas where price can fill or target for continued push. So right here we had a longer wick here, a smaller wick here. No, sorry, it's not those. Sorry, like something like here. These two are kind of confusing because they ended up filling, but with time, But this one here filled it. This one here filled it. But this is a 15 minute. You jump on the 30-minute and up is where you kind of look for wick fills or shit like that. Okay, so let me actually put this down. $30-minute time frame. Okay, so it is preferred that there's a previous low and big bullish volume candle that breaks above a previous bearish candle. Okay, so it is preferred that there's a previous low. Previous low. And a big bullish volume candle. So let's just say this one here, previous low, big volume candle. That breaks above a previous bearish. So let's say this was a bearish candle right here. Bearish. Bow. Right? That breaks above a previous bearish candle. Wait for retest and only half of the candle for confirmation to go up. So the retest being like here and then entry right there. And it always breaks above higher. So sell. I'm sorry, stop loss. It'd be like right here, stop loss. For it to continue going up. Same for a sell. Okay. After a break, we must locate a high or low because it is entering a new zone to either higher high, higher low, or create lower low, lower high. So right here, a break, look for a low, lower high, lower low, lower high, lower low. Does that make sense? Trend, right?
Yeah.
15, 30-minute time frame indicate the start indicate the start of creating an uptrend, downtrend. So in the 15-minute, 30-minute, mainly the 30-minute, 15-minute, it can show you the confirmation of a break, right? Right here, confirmation of a break. But 30-minute, you want to wait for like an actual like solid, like right here, probably this one right here was probably on the 30-minute. I'm trying to think, probably like a bullish candle like this. And the bearish right here probably was something like right here. And it looked like it crossed, but on the 1 hour it didn't. So now it's doing something like this. And then came back, retested a little bit, failed to break it, failed to retest this high, came down, smashed. So on the 30-minute, it gave us that downtrend, which is what happened here. That downtrend right there gave us that confirmation of a downtrend starting to form. While 1 hour, 4 hour are creating lows or highs plus retest to form support and resistance. So 15-minute and 30-minute are your setup. While 1 hour, let me make sure I'm saying this right. Sorry. 1 hour, 4 hour is your setup. 15, 30-minute is your entry. Combine these two together. Combine these two together, and you get what? Uptrend, downtrend, consolidation, right? And in the right direction, you're going in the right direction on these two. Okay, so at this point in time, we use Fibonacci, did I say that right? Fibonacci, to locate the next position by using what are the confluences. Regardless of the circumstances, you will always need confirmations to enter a trade. However, when using Fib, you are using the 1 hour, 4 hour confirmations to determine market direction, which is the uptrend, downtrend that we just talked about. Example, downtrend, Fib levels, we already went over it. If proper high or low is set, wait for a proper support or resistance to form before jumping. So what does that mean, right? What that means is, and I'm going to use a different color because this was kind of bullshitty. No, use black. So let's say a high is formed, right? And then price comes back down. Wait for proper support. And I mean support because like this was a low. It respected that low, supported, wait for it to come back up and break that high, then come up again, create a high, do the same thing all over again right here, and then break that high again, right? That's how you look for, for actually entering the trade or actually knowing where the direction of the market is going before jumping based off of uptrend, downtrend, fib levels. And we established that when we went over for the fib levels. Here goes a caution: do not counter your bias. If you're looking for bias and it starts going down, don't fucking chase it. Let it go. Wait for the fucking position to go back up, and then take your fucking entry. Do not counter bias. If not sure, come back to the next session, or wait for a different support or resistance on a higher time frame. Okay. If the higher time frame, 1 hour, 4 hour, close bullish or bearish, then they are big volume candles on a bigger setting. So in the 1 hour, let's say we see a big solid volume candle, right? Right. 1 hour. Let's just say 1 hour right here. If the higher time frames have 1 hour, 4 hour, close bullish or bearish, then they are big volume candles on a bigger setting. So that means that what just happened here, like this shit right here, for it to go up, happens on the 1 hour, on the 4 hour, and it's bigger targets, 30, 50. Nope. None of that. 100, 150, 170, 220. Sorry, 230. Shit like that for the bigger time frames. Daily, 200. But that's, again, I'm not saying it's not possible, just saying it's harder for daily because sometimes it'll close like this, and then the next candle just goes boop. Then the next candle goes boop. Then the next candle boop. And unless you understand the dynamic of what just happened, it was a high, broke the previous high, came back down, retested the previous high, and then shot back to holy hell. Essentially on a bigger setting. But you only see all these wicks and you're trapped in all this bullshit and you're like, fuck, where do I enter? So, no. Not yet anyway. Maybe when you get a bigger account. And you actually know how to follow the trend on daily. No. Possible wick fills. Same thing for volume candles, possible wick fills to fill that candle to create a volume candle and continue the trend for up or down. So then if we have a big bullish candle, if we have big bullish candles be low and they are low volume. I don't know what the fuck. Okay, so if we have big bullish candles and they are at the low and they are low volume, then we start looking for support to look for buys. So if even if there's like small little weaky candles, right? Small little weaky candles on the fucking support. Shit, that's a shitty square. You know, we know that unless there's a bearish that comes down and destroys all this shit, price is still going to continue going up. That's what that means. Then we start looking for support for buys. Okay, and that's it. Same goes for sells, and that's all I have. Still there?
Here, bro.
Oh, that took me like an hour to fucking write. Oh, or more, probably more.
Are you still working on that what was it, like a chart that you drew up? Like a guide. It was more so of a guide. There we go.
Yeah, I have to redo it because and essentially this what I wrote down is gonna be part of the guide pretty much. So like my goal was to do, remember I told you, right? I was gonna do like a like where you could write it down with like erasable markers and shit.
Yeah.
Yeah. I'm still gonna do that for sure. One like this month that comes by, I'm gonna oh shit, you know what? I know what you're talking about now. Forgot about that one. The one that I shared with you guys. Right?
Yeah.
On documents.
Yeah. Yeah.
Okay. That's the one you were talking about. Okay. Yeah. Well, I'm gonna do that one, and I'm also gonna do like an erasable one as well. Oh, this girl is fucking dead ass. Okay, so